Everyone, it's Peter Schiff. It's Monday, December 21st, 2009. Well, we still have a continuation in the corrections in both the dollar and gold. Gold dropped about another $20 today. The dollar index eked out a small gain, but it continues on a positive trajectory. The stock market managed, to be higher on the day. The Dow was up 85. Most foreign markets were pretty firm. The main action, I think, was in the Treasury market. The 10-year really got beaten up pretty bad. It was a huge down day for the 10-year and the 30-year bond. We're at the highest yield now in over 4 months, I think. The yield on the 10-year Treasury is still just under 3.7%, which is still low in the historic scheme of things, but it's moving up, and it's a lot higher than it was. And ultimately, we have a lot more debt now, so as interest rates go up, it's a much bigger impact on the government than when, there wasn't as much debt out there. Of course, the positive spin that Wall Street puts on rising interest rates is that interest rates are going up because the economy is improving, because there are better prospects for growth. I don't think so. I think it's happening because of inflation and because of the supply of bonds that is hitting the market because of these big deficits. And if rates keep rising, as I think they will be, I think we can be back above 4% in the 10-year pretty quickly. If we get back up to 4.3, which I think we could probably do maybe by early next year, we'll have the highest interest rates since early 2007. And obviously, people had a much better outlook for the U.S. economy back then in general. And if we have higher rates now than we did then, given all the problems, it's obviously not because of growth. It's because of inflation and because of supply and demand. Anyway, I also wanted to comment a little bit about the blog I did last week where I talked about the death tax, the inheritance tax. And I noticed a lot of comments on that particular blog. And a few of them that I wanted to address had to do with, envy and jealousy, where people were, blogging or responding that they were in favor of this tax because it was fair. It equalized things out, that it wasn't right for some people to just inherit a lot of money, and therefore we got to have this tax just to kind of level the playing field. Well, first of all, life isn't fair. I mean, that's just the way life is. There are some people that are born smart. There are some people that are born attractive. There are people that are born with certain types of talent, whether it's artistic or musical. And there are people who are born to wealthy parents. There are people who are born with money. I mean, that's just life. I mean, we can't try to use the government to try to correct what we think is just some kind of social wrong. But once you get beyond the envy part of it, think about it from the perspective of, number one, the person who earned the money. A lot of the people who are very rich, who wanted to leave their money to their children, started out poor. They earned that money. And so isn't it fair that they get to decide what happens to it? And if they want to give it to their children, the people whom they love most in the world, why should we try to stop them? But then when you take a step back again and you look at society and you look at small business owners, who better to take over a business than the owner's children? After all, in many cases, they're in the business since they're little kids. They work summer jobs. They work their way up. Most business owners, if they have a big business, they don't start their kids at the top. They start them at the bottom, and they learn the company from the ground up. So they're in a good position to continue the business, to continue a profitable business that was started by their father or started by their grandfather. The problem with the estate tax is it makes it very difficult for these businesses to be transferred in whole from one generation to the next, because in many cases there's not enough liquidity to handle the tax, and so the businesses have to get liquidated. And also what happens is a lot of the small businessmen understand this during their lifetime, and so they plan for the sale or the liquidation of their business prior to their death because of the estate tax, and that there is a huge benefit to the economy that goes way beyond the individuals involved that own the businesses. Because when you destroy businesses, you're destroying capital, you're destroying jobs, you're destroying economic growth. Sure, is it unfair that some people are born with from rich parents and some people are born from poor parents? Sure, it's not fair, but that's life. But you know what's great about the United States? That even if you are born into poor parents. You still have the opportunity to get rich. You have the opportunity to start your own business, even though you come from modest means. And you know what? If you are successful, then your children can live a better life than you can because you can leave your business to them. Now, that's, of course, the way it should be, right? But the way it is in the modern day of America, it's not happening that way. And we need to change. You know, another move, massive move in the wrong direction that's making its way through Congress now, and it looks like it's getting pushed through, is the health care bill. But, you know, they're trying to dress this thing up and spin it as a deficit reduction plan. I mean, come on, who are these guys kidding? They think this thing is going to reduce the deficit? The actual cost of Medicare is already exceeding the original estimates by a factor of 10, by greater than 10, adjusted for inflation. So these guys were so off on those estimates. How can these ones be true? But the interesting thing about this is that all the new taxes that are going to generate revenues, they start right away, as soon as this thing is passed. But the supposed benefits, they don't kick in for another 4 or 5 years. That's one of the primary reasons that they can try to claim this thing raises revenue, because off the bat, it's mainly a tax bill. The spending doesn't come till later on. But one of the things that's really disingenuous about this whole thing is the idea that they're promising that this is going to stop insurance companies from discriminating against people who have a pre-existing condition, and they're going to make it illegal to charge sick people more than healthy people for health insurance. Now, this obviously isn't going to happen because there wouldn't even be an insurance industry. It's impossible. I mean, nobody would buy insurance if you could just simply wait till you're sick and then buy the insurance. I mean, why waste your money? Why pay the premiums? The only reason you buy health insurance is because you might get sick, and you want to pay for it now because you know if you wait till you get sick, you're not going to get coverage because no one's going to cover you. Because insurance companies live off of taking in premiums from people who are never going to collect the benefit, never put in a claim, because they're not going to get sick. And the people who are unfortunate enough where they actually have a major medical problem, they're able to collect a claim because so many other people didn't. Well, this bill destroys that concept. Now, that's the reason I believe that this provision doesn't kick in for another 4 or 5 years. But what does kick in right away is a penalty tax on people who don't buy health insurance. And I think it's $750 a year, although it might start off lower and it builds up to $750 a year, a penalty for people who don't buy health insurance. But you know what? That penalty isn't high enough, because I'd sign up in a second. I would immediately cancel my health insurance coverage if all I had to do was pay $750 a year, but still had the right to buy the health insurance if something went wrong. You know, why waste money paying premiums when I'm healthy? I'll pay nothing. I'll pay the $750 a year fine, and then if I get cancer or I get into a major accident, then I'll quickly buy the insurance. So what's going to have to happen, and this is where they're so disingenuous. What's going to have to happen is sometime between now and the time where this provision kicks in, they're going to have to dramatically increase the penalty on people who choose not to buy health insurance. It can't be $750 a year. It's going to have to be maybe $7,550 a year. And ultimately, it'll probably be $10,000 a year or more. They're going to have to keep increasing that penalty as insurance costs keep going up. Otherwise, people will opt to pay the penalty instead of having insurance, and the whole system falls apart. So ultimately, they're going to have to either cancel that provision or raise this tax, but we can't have both. But for the politicians to claim victory based on this current bill, the bill as it is written, as it's being proposed, cannot work, because the whole healthcare industry would fall apart if the provisions were left intact. Anyway, that's it for today. I'll be back again later in the week. Take care, everybody.